What medical expenses can I claim on Schedule A? Imagine turning your out-of-pocket medical bills into tax savings. If you have significant health costs, knowing what you can claim might help reduce your taxable income. When you file your taxes and itemize your deductions, you can include unreimbursed medical and dental expenses. But there's a catch. Only the amount that exceeds 7.5% of your adjusted gross income is deductible. So, if your total medical expenses are high enough, you could see some relief. You can claim expenses you paid for yourself, your spouse, and your dependents during the year. This includes costs for diagnosis, treatment, prevention, or mitigation of health issues. It also covers treatments that affect how your body functions or looks. Some common deductible expenses are payments to doctors, dentists, surgeons, chiropractors, psychiatrists, psychologists, and other medical practitioners. Hospital stays, nursing care, and long-term care services also qualify. If you paid for prescription medications or insulin, those costs count too. Medical equipment like wheelchairs, crutches, hearing aids, and glucose monitors are deductible if you bought them out of pocket. Health insurance premiums are also included, but only if you paid with after-tax dollars, not through pre-tax payroll deductions. Vision expenses such as eye exams, glasses, contact lenses, and corrective surgeries are deductible. Dental costs like cleanings, fillings, braces, and dentures also qualify. If you received physical therapy, mental health counseling, or addiction treatments, those expenses count as well. Certain alternative treatments like acupuncture are deductible if a healthcare provider prescribed them. If your doctor recommended special dietary foods for a medical condition, those costs can be included. Home modifications necessary for health reasons, like wheelchair ramps or grab bars, are also deductible. Remember, expenses that were reimbursed by insurance or other sources cannot be claimed. Only unreimbursed costs count toward your deduction. Keep detailed records and receipts of all medical expenses paid out of pocket, especially if you support family members who qualify as dependents. For spouses and dependents, expenses are deductible if services were provided or payments made when they were your spouse or dependent under IRS rules. To figure out your deduction, total all unreimbursed medical expenses for the year. Then subtract 7.5% of your adjusted gross income. The remaining amount is what you can claim on Schedule A. Since you only benefit from itemizing if your total deductions are higher than the standard deduction, compare both options. Including medical expenses can help lower your taxable income, especially if you have high medical bills or ongoing health issues. By understanding what qualifies and keeping good records, you can make sure you get the most out of your medical expense deductions. This can be a helpful way to ease the financial burden of healthcare costs when tax season arrives.